Good news for the global economy. Figures for the first quarter of 2019 indicate that the global economy performed very well in the first quarter. If you look at real growth figures for the US, China, and for the euro area, they were all surprisingly good. For the US economy, it was particularly a surprise because the US economy is going through a very long and lengthy economic cycle. Still, we see that the American economy persists in its economic performance. And that's good news, of course, for the global economy because the US economy is still the largest economy with positive spillovers for all countries in the world. Also, the Chinese economy did very well, surprisingly well given the international headwinds, in particular the trade war with the US. Nevertheless, the Chinese government was able to stimulate the economy with an additional stimulus program, and that helped in the first quarter. Finally, in the euro area, we also noticed that growth was very well, and this was mainly driven by a recovery in some euro area countries, notably in Italy and in Germany. The recovery in Germany is very important, obviously, because mathematically speaking, Germany is the most important euro area country, and therefore any recovery in the German economy automatically translates into a European economic recovery. So this is all positive news. Now the question fundamentally is whether this rebound is a temporary rebound or whether this is the trend of a new and stronger economic performance in the future. We believe that, unfortunately, this is only a temporary rebound. It's temporary, it's basically a reaction to the very weak second half of 2018, rather than the start of a new and strong economic trend. We believe that this is the case because if you look, for example, at the German industry, we notice that the recovery is mainly driven by sectors which actually were hit very severely in the second half of 2018, in particular the automotive industry and the chemical industry. The overall trend also in German industry remains rather negative in the longer run. So therefore we believe that the rebound that we currently observe in the first quarter of 2019 is good news, but unfortunately it won't lead to a new and strong economic trend in the future. Inflation figures were also up. Now, higher inflation is mainly driven by economic developments, but in particular also by seasonal effects. And those seasonal effects are very important at this moment due to the timing of Easter. Now, apart from the timing of Easter and the seasonal effects connected to it, also the higher oil prices are supporting inflation figures and headline inflation in particular. Now, the oil price remains around $70 per barrel, and this is mainly driven by geopolitical uncertainties, notably the US sanctions on Iran. Now, we do expect that the oil price will stabilize and will gradually come down again, in particular in an environment where economic growth starts slowing down, globally speaking. Despite the very optimistic and surprisingly good growth figures for the first quarter of 2019, we are very cautious for the rest of this calendar year and for the coming years. And this has a lot to do with the international uncertainties surrounding the global economy. In particular, the trade war plays a role. The trade war escalated again. In particular, there's no breakthrough in the negotiations between the US and China on reaching a trade and investment deal. Moreover, the US administration and US President Donald Trump imposed higher tariffs on a very substantial part of Chinese imports. For more than 200 billion US dollars of Chinese goods are affected by these decisions. Obviously, also the Chinese government is going to react to this, so this means that there is an escalation in both directions. Finally, also an escalation towards Europe is still a possibility. The US administration has to decide on potential higher tariffs on the imports of European cars. If this will take place, well, this will have automatically major consequences for the European economies. Given these international uncertainties, it is no surprise that we also see consequences in the bond markets. Globally speaking, we notice that long-term bond rates are very close to zero, for example, in Germany, or very low in other countries. Also within the European Monetary Union, we notice that the differences between the German bond rate and other European bond rates are very restricted from an historical perspective. So all of this clearly signals that there are still safe haven effects playing a role in bond markets. Investors are very cautious about the future. Also in this environment, it's not a surprise that central banks are very cautious. They are also waiting for new figures that should confirm that the current positive elements from the first quarter will be continued in the longer run. If this is not the case, there's no reason at all for central banks to change their monetary policy stance, So therefore, we do not expect that the European Central Bank in particular will raise interest rates very soon. At the best, we expect the ECB to increase interest rates next year. For the Federal Reserve, we don't expect any interest rate increases anymore. Rather, we expect the Fed to cut rates just once next year. To summarize, it is obviously good news that the first quarter of 2019 was very good for the euro area, for the US and for China, so for the global economy, one could say. But we don't expect this to be the start of a new upward trend for the global economy. Rather, we expect this to be a temporary recovery, basically as a reaction to what happened at the end of 2018, and therefore we are very cautious in our economic scenario for the near future as well as for the longer run.